Hello and welcome back to VectorVest's weekly special presentation, your go-to source on investing, trading, and retirement strategies. Today we're going to focus on retirement strategies in the face of a market that's been in a downtrend since November. If you've been following us, you'll know we started alerting our subscribers back on November 10th to stop buying stocks. And then again, each day the next week, culminating in the confirmed down on November 22nd. But now we're in July, and what should you do? That's going to be our focus in this video, so stick with us. The current market situation reminded me of a series of retirement strategy essays written back in September of 2009 by our founder, Dr. Bart DiLiddo. We put them together for you in a PDF you can download at vectorvest.com/retirement essays. If we look back at the 2008 and 2009 period when the essays were written, we see the market peaked in October of 2007 and then had an overall downtrend into July before it took a nosedive until March 2009. At that point, there was a major catalyst that started the uptrend. Citigroup had reported that it had become profitable for the first 2 months of the year. Let's compare back then to now. You can see similar patterns of downtrend, where there was a peak in October to November area, and then downtrends through July. But what lies ahead? We don't know if 2022 will drop like it did in 2008, nor can we predict when the next big rally will be. But we need to be prepared either way. Earlier, I mentioned a series of essays written in September 2009 by our founder, Dr. Bart DiLiddo. He began his essays stating he got a letter from someone who watched their retirement portfolio drop from $650,000 down to $500,000 and wanted to know a prudent way to generate 10% annually with some reliability. I highly recommend you read the essays, but here's a high-level look at Dr. DiLiddo's response. Dr. DiLiddo said he would take the $500,000 and break it into 5 parts, each consisting of $100,000. 2 parts, or $200,000, he would put into relatively safe bond funds paying 6% interest. Of course, interest rates aren't 6% right now, but we'll come back to that shortly. The remaining 3 parts are separated into 3 different portfolios. One portfolio focused on buying good, safe stocks rising in price that also paid a slight dividend. Plus, throughout the year, Dr. DiLiddo said he would sell out-of-the-money covered calls to generate current income. The second portfolio aimed to generate most, if not all of the income it needed directly from dividend payments. It would focus on managing a diversified portfolio of high dividend yield, optionable stocks with no more than 2 stocks in any one business sector. The reason they're optionable stocks is to allow flexibility to sell covered calls if desired. And the third portfolio focused on generating income by selling covered calls on high-yield stocks. Now, remember the overall objective was to make 10% of the $500,000, in other words, $50,000. So Dr. DiLiddo targeted making $12,000 in the bonds, $15,000 in the growth portfolio, $11,500 in the dividends, and $11,500 in the covered calls. Let's go back to the question from the very beginning. What do we do now in 2022? Bonds are no longer paying 6%, and the market's in a downtrend, which means we may be in more of a cash position in a couple of these portfolios. How can we continue to make consistent income even in a market like we're in right now? Dr. DiLiddo's essays go on to detail how a VectorVest subscriber would implement the system he described. And they were the genesis of our retirement courses and eventual retirement coaching group. In fact, stay tuned for upcoming training videos where our manager of retirement, Jim Penna, will go into detail about how to manage these retirement portfolios in today's market. But in today's training, I've invited our manager of options trading to give you an additional strategy to consider. It's a strategy he's been using year in and year out to generate consistent income. It's a prudent options trading method that is amazing. In fact, he's up about 14% this year while the market is down 18%. Let me bring Ron Wheeler in so he can show you the primary system he uses to generate income in both up and down markets. It only involves trading once a week and only takes about 15 minutes a week. Let me pass it over to Ron so he can discuss the details with you.
Thank you, Brian. And as you can see the market here in 2022, it's been predominantly down. We're down 16-17% so far for the year, I estimate, and it hasn't been a really good year. However, we have a system that, regardless of market direction, can get you that income that is so important that Brian talked about. Part of your retirement portfolio needs to be an income-producing section. Even if you're not retired yet, income is still very important. It's a great way to beat inflation this year. Even if you're working, it's a good way to add a second income stream to your house. Now, I always like to start with a little bit of a prove it idea, and this right here is my results so far using the system I'm going to show you today. I'm up about 14% so far for the year, and if you take a look at some of the details, over on the right, you'll see that my average winner is about $1,400 or 1.4%. I'm trading $100,000 in capital to get to this, and my average loser is about 1.6%. I'm not risking a ton of money. I like to use the baseball analogy of getting on base is the best way to score runs. Yes, the home runs look great, but getting on base is really the key here. I don't like to shoot for that home run. I like to be safe and only have small amount of risk. Now, below that, what you're also going to see is the month-by-month return. I had a little bit of drawdown in April, but the 6 months that I have tallied so far for the year, I've had profits in 5 out of 6 months. One of the things we'll talk about later is, yes, you're going to have some losses here and there. Nothing is 100% right. But as long as you stick to an income-producing system, over the long haul, you will see success. Now, breaking that down, as we talked about, the direction for the year has been predominantly bearish, but you'll see my true trade breakdown. I've got 16 bearish positions, that's the short call, and I've got 12 bullish positions that are the short put. So overall, about a 71% success rate. Now, to do this, I want to keep it simple. I don't want to have something where I have to spend 5 hours a day in front of the market. In fact, one of the reasons why I started trading options to begin with is to get out of that grind of being a day trader. I day traded for over a decade, had great success at it, but there comes a point when you just don't want to spend 8 hours in front of your screens every day. It becomes, like I said, a grind. It's just not fun. So options gave me the ability to back away from the screen while still maintaining good profitability. Now, first thing I want to do to keep it simple is we have to have market direction. And I want you again to keep it simple. The market goes up and the market goes down. This year, as we talked about, it's been predominantly down. Last year it was predominantly up. 2020 was a little bit of both with COVID. So what I like to do is take a look at one of our market timing indicators called the DEW, the DEW. And as you can see, the market topped in November of last year and has been predominantly down ever since. But you can even see we got a couple green arrows up, and those were the ones that drove the majority of my bullish positions. So even though we're down for the year, this market timing is great because it'll tell you, hey, the downtrend is on pause. You need to go bullish for a time right now to make sure you put success in your favor. Now, the second thing I want to talk about is options, and more importantly, selling options. If you want to trade with high probability, if you want to trade for income, you've got to be an option seller. It's the only way that you can do this. So let me explain. If you take a typical trade, and this could be any graph, it's the SPX because that's what we're talking about, but it could be a graph of a stock, it could be anything. When you buy something, you have a 50-50 chance of success because it has to go up. If it goes down, you lose. If I were to go short or sell something, it has to go down for me to make money. If it doesn't, I lose. Well, what we're going to do, if you're bullish, we are going to target an option to sell that has less than a 35% probability of getting hit. And what you can see here is this is a current candle on the S&P 500. That means I will go below the current price, pick out an option strike price that has less than a 35% probability of getting hit. This allows me to make money even if the market stalls and goes sideways or goes down. It gives me room to breathe. And this to me is the definition of income trading. An income trade to me is one where a trade that you can place essentially that gives you a statistical better than 50-50 shot. Not on an indicator, not on a study, but on the construction of the trade itself. Now, when we sell an option that has less than a 35% chance of being hit, it gives me a 65% probability of winning right from the start of the trade. That's the beauty. Now, bullish or bearish, it doesn't make a difference. If you're bearish, you're basically going to do the same thing. If we think the stock or the market will go down, guess what? We've got a candle. We're going to choose a price above it. Now, what that does is it gives me an opportunity to make money if the market goes down. If I'm wrong and it goes sideways or up a little bit, I can still be profitable. Remember, we are targeting strikes that have less than a 35% probability of getting hit. That gives me a 65% probability of success. The third principle I want to talk tonight about is don't be greedy. You know, as traders, as investors, we've probably all been in that position where we're up 15, 20% on a stock purchase or one of our trades, and all we can think about is, all right, if the stock goes up another $5 a share, $6 a share, $10 a share, how much money we can make. And we hold on to that position even as it starts coming against us because it can go so much higher. Don't be greedy. Back testing has proven that it's better to take profits than try to hold out for more at certain levels. Now, in these types of trades that we're doing, we take our profits at 50%. 50% has proven time and time again through back testing that this is going to maximize not only the probability of the trade, you're going to be right a lot more, but also the profitability. So if you hold out for more profits, ironically, you're actually going to make less because the longer you hold on the trade, you're going to lower your probability of being right. You're giving the market much more time to move against you. Now, I want to put this into a picture. This is an options risk graph of a trade that we take. Now, right at that first arrow is at the trade beginning. So you can see right here, if you kind of match up where that red arrow is over to the right, you will see that the trade is at 0 profits. Now, take a look and follow that dashed blue line up to where that second arrow is. This is how high the S&P would have to go for this position to reach a 50% profit target. Now, I feel that the benefit of this trade is it has a maximum profit. I like that because there's a cap. There's not an area where you can say, oh, if it just keeps going up and up and up and up, I can make so much more. It caps your profits. That keeps you honest, in my opinion. It makes profit taking much, much easier. But I want you to watch as that dashed line goes up. In order for this trade to reach 100% profits, the market would essentially have to go up about 340 points versus only about 90 points to get to your 50% level. Holding on for that 100% return is just not worth it. And a special note for those of you that have traded options before and have sold options before, you may think that, well, Ron, isn't one of the benefits of this time decay? And the answer is yes. And you might say, well, why can't we just hold it for time decay? Because time decay, even in the final days, can still be very slow. We don't want to wait for time decay. We want to maximize our profits, take our profits as quick as possible, and move on to the next trade. Even if you waited for that, you're still subjecting the trade to a great amount of risk. The fourth principle I want to speak about is it's okay to have a loss. Now, systems that return good success rates over time, even those systems will have areas where you're going to lose a little bit. I showed you my results because I want to be upfront about it. In April, I had a losing trading month. That's okay. I didn't give up on the system. I went right back to it, and as you saw in May and June, it was successful. Baseball is a great analogy of this. Even if a batter strikes out, they can go back and learn from what happened. If a pitcher gives up a home run, he can go back and say, okay, well, that batter likes this. He hit a home run off me, so I'll avoid that in the future. The key of this is we want to keep our losses small. We want to make sure that when we lose, we're not taking huge risks. That's the whole idea. Don't let a small loss turn into a big one. That will destroy any profitable income system. Now, fifth, I want to talk about staying consistent. It's like a assembly line, right? We get the best results from assembly lines by duplicating successful processes. In saying this, again, I want to stress the enemy of any income trader is taking losses that far exceed the average gain. You know, I always use the analogy, and you might have heard this before. If I jump off my roof at my house, I'm going to probably break my legs. So how can I mitigate that risk? Well, I can put pillows down, maybe make a pile of leaves, maybe put a mattress down, a trampoline. But you know what would be better? Just don't jump off the roof. If I don't jump off the roof, there's no mitigation needed, and I don't have to worry about breaking my legs from doing it. Now, how does that relate to trading? In a very big way. Don't take trades that have huge losses. The beauty about these types of income trades, and one of the reasons why we recommend this to our retired clients, is because they have fixed losses. You know up front your profits and your losses. And you design the trade not to have those huge losses that can really draw down your account significantly. Now, to make this easy and to make it a system that you can trade in as little as 15 minutes a week, we put everything into a nice step-by-step approach. We talked about a little of this so far. Number one, we start with market direction. And market direction is simple. It's either bullish or it's bearish. I personally use the DEW, and I've had great success with this over the last 6.5 years I've been trading with VectorVest. Stock Finder. Normally, you might have to go out there and track through 3,000, 4,000 stocks to find the best trades. That's time consuming. 15 minutes a week, trade the S&P 500, the SPX Cash Index Options. Option selection, we make it simple. We're going to choose the strike price that gives us a 65% chance of winning, and an expiration date that maximizes the time in trade, works a little bit of time decay in it, and allows us to be successful. The trade setup, we look at the size of the trade based on the size of your capital, and we verify that the risk reward. Remember, we don't want to take any trades where we're going to break our legs, using that jumping off the roof analogy. And then finally, the trade management. We have a profit target, and we have an exit strategy that you're going to follow. Now, the best part of this, with a lot of brokers out there, you can actually place orders ahead of time, not only for your profits, but you can place an order ahead of a time for your losses as well. And in a lot of cases, this can be a turnkey system. Now, I mentioned my 6.5 years at VectorVest. I started at VectorVest in 2016. So taking a look at this system, since 2016, when I first introduced the SPX trading model to our clients, we've had a 350% ROI, compounded ROI, since 2016. We've had a total of 341 trades. Now, that's 341 trades over 6.5 years. So it's not like you're placing 20, 30 trades a month. This is designed as essentially a once-a-week trade. That's it. We've averaged 60% winners. And if you take a look, our average gain and our average loss have been very, very close. Now, again, this is assuming that you started, and this is the best part of this. So even if you're just getting started with income trading, you don't have to have a lot of money to do this. Had you started with a $5,000 account in the beginning of 2016, you would see $17,545 in profits. Now that's just your profits. You still essentially have your $5,000 left. So your account is now $22,545, and you had $17,000 in profits. That's the beauty. Now, I mentioned that's compounded return over the course of the last 6.5 years, and that is up to date. That is actually up to date through the trade this week. Now, what you also see towards the end here is we did have a little bit of a drawdown, and we had through July a much better July, and that's to be expected. What happened in July was the market changed directions, and this is typically where you're going to see a little bit of drawdown as we go from a downward market to an up, or vice versa from up to down. Now, this has averaged over 30% ROI per year since 2016. Think of all the markets we've had since 2016. 2018 was very bearish, not very bearish, but bearish. 2019, 2020 was a rough year for a lot of traders. 2020 was a very good year for us. We did very well that year. 2021, pretty good year, right? Good year for the system. This is the beauty of this. It performs in any type of market condition. So, if you're ready, if you want to learn this system from A to Z, this is something that we teach in the all-new Options Paycheck experience. We're launching the class soon. This is your opportunity to get in there, get this system implemented. This is the most comprehensive options trading program that is on the market. Now, after going through this course, you will know exactly how calls and puts work with all the fancy terms that you need to know and what you no longer have to know. You will take the fear out of options, even if you're a beginner. We're going to give you clear signals telling you when to trade and when not to trade. Now, that particularly relates to stock trading. The SPX is more of an always-on system. You're going to be able to quickly identify not only the stocks, but when the S&P is the best candidate. You're going to set up income trades that give you a 70% success rate. You're going to have a trade management game plan in place. So regardless of what the market throws at you, you'll not be frozen like a deer in the headlights. You're going to be able to confidently enter and exit trades with your broker, whether you've done this before or you haven't done this before. And you're going to implement a system to safely and consistently generate income. Now, the course is 8 modules long, and the whole step-by-step journey is one that takes you from new income trader all the way to consistent income. We're going to teach you how to do this not only on stocks, but we will also teach it to you on the S&P 500. And the course has a money-back guarantee. If you can go through the entire course, and if you're not satisfied, we've taught you how to profit using options, you can get your money back. There's no risk. The only thing we ask, and the only caveat is, you have to do the course. You have to go there, do the assignments, watch the videos, and you have to participate in the course. That's the only thing that we ask. Now, I'm going to throw a couple bonuses in this to make this even better. Bonus 1 is what we call the Mastery Package. This includes Mastery live sessions for every module that we teach. The modules are going to all be released to you up front, so you can go through all 8 modules at your leisure, but every week we do Mastery sessions for 2 modules. That way, we're learning step by step along the way. Then we're also going to have a weekly wrap-up Q&A that'll cover the 2 modules of the week and really give you another chance to ask questions of us. We have an online Facebook support community. Join it. You're going to be in there with your peers, with us as well, and it's a good area for you to get that peer-to-peer support. Private dedicated email that goes right to me and my Options Paycheck staff, and then also access, if you do not have it, to both the VectorVest and Options Pro software, which are the 2 best tools in the industry for stock and market timing and options selection. You're going to get to test drive those for the 2 months of the course. Now, we're also going to add an implementation month. Now, during the course in August, we teach the modules. In month 2, which is in September, you're going to be able to watch my live trading sessions. That results I showed you earlier, 14%, I do that live with my clients every Monday. You're going to get access to those. We're going to send you 2 office hour sessions a week. That way you can have live interaction with me and we can go over your trades. We can look for more trades. It's just your opportunity to get with me and the Paycheck team to ask any questions. It was one of our biggest feedback items from the Paycheck curriculum. Please give us more time to implement with you, Ron. Now you've got it. And then finally, what you saw tonight was the SPX Paycheck system. We're going to teach you, if you want to make this as fast as possible and as easy, 15 minutes a week using the SPX to draw a good, consistent income, just like you saw tonight. Now, quick recap. You're going to get the complete Option Paycheck training modules. That means 8 training modules with accompanying videos and checklists and cheat sheets. The Mastery Package, which is 12 total live sessions to talk with us and really master the curriculum. Implementation month, where you're going to be watching us trade. You can piggyback if you'd like. And then those live office hours twice a week to help you make sure that you're implementing this properly. And of course, our SPX Paycheck system. Now, to make it easier, if you want to do it by payments, we can get started today for $4.95, and then there's 2 additional payments of $4.95, or a one-time payment of $12.95. However, since you watched the special presentation tonight, I do have a special for you. If you order before Monday at 7 p.m., we drop the price to $9.95. This is your opportunity to get in there, use our early bird pricing, and get yourself registered. Go to www.optionspaycheck.com and let us teach you how to build a successful and profitable income portfolio. Thanks again, everybody, and good night.